Today I'm joined with Robert Sinn, online known as CEO Technician and from Goldfinger Capital. He's got a lengthy history in the space. Robert, good to see you again.
Thank you. It's my pleasure to be here, Jeremy.
Yeah, I'm really excited to sit down with you. You've become a rising voice in the junior space. Realistically, you've been here for a long, long time. You're becoming very, very active, as I was saying earlier, in front of the camera, in front of the microphone. Your analysis is being very well received. Your predictions are seemingly going very well. And so before when we spoke in our pre-interview, we kind of were chatting about how you got into this space, and you have a very interesting sort of origin story that brought you to the junior mining space because you are from down in Florida in Miami. It doesn't traditionally attract a ton of commodities traders or junior mining enthusiasts, and it's sort of similar to mine in the sense we got brought in through our fathers, and I don't know if we were inducted or indoctrinated, but needless to say, we're both here. So kind of walk me through a little bit of that history, how you kind of got introduced to metals, mining, commodities, and the junior markets.
Yeah, that's a good place to start off. So yeah, like my inception story goes back to childhood. So I was born in Manhattan, New Yorker. My father was a businessman and an investor, and he actually invented the first stock quote system that stockbrokers could have on their desk in the 1960s. So this was like way ahead of its time. There was no internet. There's no Wi-Fi. There were no cell phones.
It's dial up.
But it was plugging a box, big box, into the phone line in the broker's office, and then plugging it in, and they would type in the ticker symbol, and you'd get about a quote that was about 30 minutes late. But
Hmm.
that was cutting edge, for the time, because previously the broker would actually have to call
Yeah.
the office in Wall Street, and then the Wall Street office would have to call to the specialist on the floor of the NYSE, and then the specialist on the floor is giving you the quote he wants to give you. Um, and there was a huge information edge to being on the floor of the NYSE back at the time. So anyway, long story short, he invented this system, the Quotron, um, in the 1960s, and ended up selling the company to General Telephone around 1970. Made a good amount of money at that time, and became, an investor at age 40. He was wealthy at that point and became an investor. And at some point in his 60s, so that was in the 1990s, he became a gold bug. So he was reading a lot about government debt, the US dollar as a reserve currency, and the risk that it could lose its role in the world, its special role. Um, and gold was around $300 an ounce in the 90s. It traded between 300 and 400 for a very long time. And he became a gold bug. So he would take me when I was 12, 13 years old to coin shows.
Hmm.
Um, and he would buy gold American Eagles, gold Maple Leafs, physical gold, like actual gold. So we would go there with cash, and we would leave with tubes of gold. And this went on for a few years. My dad got really into it, and investing a pretty good chunk of his net worth into gold. And so that's when that started, and I sort of got hooked on gold at that point too. When your father does things, I think it's a natural thing for boys and men to sort of follow in the footsteps to some extent.
Hmm.
And so I was hooked as a gold bug, in my teens. Um, and then about 10 years later, he transitioned into junior mining. So obviously, this is a pretty common story in the sector where you're a gold investor first, and then you read something about a mining company and the wealth that they could generate for you, and then you sort of delve into the stock market aspect of gold and gold mining. And so that's what happened to him. He was reading some different writers in 2001 and 2002. And actually, the timing was serendipitous because gold bottomed in 2000, 2001.
Mhm.
And the mining sector was absolutely obliterated in 2001. So not only was there a recession at that time in 2001 and the hangover from the dot-com bubble bursting,
Yeah.
but gold was flat on its ass at $300 an ounce. So just think about that. You had a whole decade where, I was talking about gold at 300 in the early 90s, 1991, 1992, gold was 300. Well, in 2001, gold was 300. So you had 10 years where gold did absolutely nothing, just went sideways and disappointed, frustrated investors. So in 2001, you had a bear market bottom in the mining sector, and nobody owned gold, and nobody cared about gold, and nobody could see any reason to want to care about gold ever, right? So from a contrarian standpoint, it was the setup of a lifetime to
Mhm.
begin getting involved in the sector in 2001 and 2002 and even into 2003. And that's what he did. He got very, very involved in it, and I got involved too, watching him and following along with his portfolio and what he was interested in.
Yeah. Yeah, and that's like I was saying, it's funny when people have that catalyst in life, maybe they come into a little bit of money or they learn about inflation or they learn about debt, how quickly it can turn you into that gold bug because it is the natural course. And same story, I remember going to it was Border Gold here in Vancouver. Oh, it's owned by Michael Levy. He was the business radio host here, but going down with my dad and I think it was 2001 and coming back with a big pail of silver. And that
Mhm.
was I think I was 13 years old and that was part of the first savings account. So that's really interesting. And then you speak about how you learn about gold first, and then when you want exposure to the bigger upside, you get into the juniors, and that's sort of the world that you've been living in for the last decade or so. A little bit more so, I think, is looking at these juniors, and there's been a lot of probably lessons learned over that time, sifting through the thousands of companies that exist around the world and the thousands of projects. Just off the top, like what are some of those lessons learned over the 10, 15 years of analyzing these things?
Ooh, what a question, Jeremy. Oh, the lessons. Yeah, I mean, you're right. Like, let's say like 10 years ago, obviously I had knowledge of junior mining. I had some experience in the sector, but I approached it more from a technical analysis, macro standpoint.
Hmm.
And I wasn't as really, you know, super intimately knowledgeable and in tune with the juniors and the exploration side of the business like I am now, right? So it has been a process over the last decade to sort of get to where I am today and sort of the focus, that I have now. So, lessons, I mean, we could be here for the rest of the day talking about lessons, but I think some of the big ones are just understanding how the junior mining business works. Like,
Hmm.
like why is it here? Why does it operate the way it does? Why is capital formed in the manner that it is? And what's the purpose of it all? And then, from a shareholder and investment standpoint, like what to look for, what do I want to see, and what do I not want to see, right? Like what it says X on an investment. No, I'm not doing that, right?
Hmm.
And so, look, the mining business is largely centered in Canada for a reason. Canada has a long history of mining and extraction of resources in all different ways. It has a
Hmm.
wealth of them. It has a wealth of resources. Whether it's metals or agriculture or natural gas and crude oil. Canada is very richly endowed by Mother Nature,
Yes.
um, and Vancouver, in particular, as a large city in Western Canada, has a deep history of mining and finding new discoveries of ore bodies throughout
Hmm.
Canada and actually throughout the world. And Canada has a lot of knowledge and know-how in the
Yeah.
extraction business. So whether it's sending their geos and their mining engineers to Mexico for a silver mine or to Africa for a gold project, uh, Canada is a hub for the world in this
Absolutely.
industry, right? And so Vancouver, the Vancouver Stock Exchange, has a history of capital formation for the mining sector. It's a very rich history. And
Hmm.
even though Vancouver as a city has evolved a great deal in the last 100 years, and it's not so dominantly focused on mining and resources, it is still an important part of the fiber of the city.
Yeah, absolutely. I mean, it's still, some of our biggest office buildings are still occupied by some very big mining companies. We had, and big mining companies moving back to Vancouver, like the Lundin Group made a decision to come back to Vancouver. And as you're mentioning, so much of this province was founded on various gold rushes and commodity rushes. Um, so there's two of those commodities that you're very bullish on or have your sights on in terms of your laser focus, and you've talked about these, and that's copper and gold. You say the only two metals you need, and I think in your last presentation you made it gold and red for copper, which is the Chinese flag, which is there's the intertwining of the importance of China playing a role in that thesis. So kind of like walk us through that. Why is it copper and gold for you? Why are these the only two metals you need?
Yeah, I mean that presentation from January turned out to be pretty well timed. I'm still hugely bullish on copper and gold. I wouldn't say they're the only two metals that you need anymore, though. I have taken a shine to silver in recent
Yeah.
weeks for number of reasons. But look, the gold foundation, fundamental thesis is really quite straightforward. We have an increasingly bipolar world
Hmm.
where countries like China and Russia, and even to a lesser extent, Saudi Arabia and Turkey, are wanting to have their full say in the world and what happens in the world, and not to be told what to do by the United States. And the dollar has been the reserve currency for many, many decades, and it continues to be the reserve currency, which affords the United States a lot of luxuries that other countries do not, benefit from, right? Like the U.S. can run up huge budget deficits and have an enormous amount of sovereign debt, and it's not a problem. It's not really a problem for the U.S. In fact, it's been part of how the world operates for many decades. And in fact, it's not a problem. It's been actually a good thing, but it's starting to become a problem, and that has a
Yes.
lot to do with the fact that the debt is now so large, it's grown so big, and the US government continues to run massive deficits. I mean, just pull up a Google search and look at US government deficits since 2020. So the 2020 deficit, 2021, 2022, 2023, and now we're looking at another nearly $2 trillion in 2024. Add it all up, the amount of debt that the US has layered on just since January 2020 is mind blowing. It's
Yeah,
absolutely
it's
mind blowing, and that's a problem because $10 trillion in 5 years is unsustainable, and the numbers are now getting so big that it's sort of getting into the realm of a debt spiral.
yeah.
um, and the fact that China is now a net seller of US treasuries and a net buyer and accumulator of gold, and
Hmm.
to a lesser extent silver, and to a lesser extent copper, well, that tells you everything you need to know. As long as China is going to leave the dollar and reduce its dollar holdings and increase its holdings of gold, copper, and silver, well, I want to be on their side of the trade, right? So that's making it as simple as possible. Like I could give you that pitch in an elevator in 1 minute and you'd get it. Just follow what China is buying and get out of what China is selling, right? That's simple enough. Um,
Hmm.
but then, we could go into all different aspects of the macro, and just the fact that fiat currencies are in a never-ending downtrend of becoming worth less over time, losing 97% of their value of 50 or 60-year time frame.
Hmm.
Well, you want to own physical gold to
Yeah.
preserve your purchasing power, right? That's the no-brainer portfolio holding that everybody should have 10% of their long-term investment portfolio in precious metals. I mean, it's an absolute no-brainer.
I 100% agree. And you actually, it's interesting. You strike me as a very rational gold bug. Most because you'll hear some people that say everything should be in gold, and the argument is that, oh, fiat currency hasn't depreciated by 95%. It was worthless when it was first created because it's just paper, and there's all types of things. But to touch briefly on the US debt here, I remember when it ticked over $20 trillion. It was July 2017, and I thought that headline was going to be something that really kind of sparked this interest. And now, like you said, we're up 40 or 50% of the debt in the last 5 years. It's really gotten out of control. Do you have a timeline horizon for thinking how things could start to shift in terms of reserve currencies, de-dollarization, sort of US global hold over the world reserve currency?
Yeah, I think de-dollarization is a process. It's not going to happen overnight. I think the fastest timeline you could possibly imagine would be 5 years, to
Yeah.
where we could say the dollar has lost its role as a reserve currency, and more likely you're talking 10 to 15 years. It's just the dollar is so entrenched, and the U.S. is so hugely important in throughout the West, throughout Europe, in different parts of Africa. It has big influence in parts of Southeast Asia, obviously Taiwan, Japanese, Australia, right? So the U.S. has big influence around the globe, and it's not like everybody's just going to run away from that,
Yeah.
because what's the alternative? And this is one of the things I say to people who say, "Oh, the dollar is done. I'm getting all my money out of the U.S." I say, "Okay, so you're telling me that you trust Vladimir Putin or President Xi more than you do, Bank of America or JP Morgan? Are you telling me that with a straight face, right?" And if they're extreme crazy gold bug, then we get into an argument. If they're not so crazy, then they say, "Oh, you're right. You have a point. I
Hmm.
shouldn't trust China or Russia more than the U.S." I mean that's crazy, right? And that's also one of the reasons why the U.S. has the deepest and largest financial markets, is the rule of law, the fact that financial transactions in the U.S. are sacred, and um, if you're wronged in some way by a financial institution or through a transaction, you can absolutely sue and have a judge, look at the evidence and, rule in your favor. And there's very clear, regulations and laws that are enforced the same for everyone. Like nobody is better than someone else in the eyes of the court of law, right? But in Russia and China, that's just not the case, right? So
Yeah.
the U.S. has huge advantages still, and I don't think it's going to be toppled overnight, or even close to overnight. But you asked a timeline for how this can play out. Look, tell me what happens in the future, and I'll give you the timeline. If we continue to run $2 trillion budget deficits every year, this could happen really fast. Like by really fast, I mean by like 2027, 2028. We will have a major crisis on our hands, a dollar crisis. treasury funding crisis, and gold will, I don't want to throw out a number like a crazy gold bug and then have you put it on the cover of the YouTube video, but
No.
let's say a lot higher. Okay,
Yeah.
if the U.S. government continues to spend like it has been the last 5 years, like a drunken sailor, gold is going to go a lot higher. And silver being a much smaller market and a much smaller trading float of silver worldwide could absolutely trade to multiples of its current price level.
Hmm. What, when did you start? Like, it's a little bit different as a Canadian, kind of viewing the US from the outside, and I probably listened to way too much Doug Casey growing up. Um, but when did you start questioning the sustainability of the debt tactics in the US and the sustainability of the US dollar?
Well, I think the first time was in 2008. I mean, I think anybody who lived through that financial crisis had to question a lot of things.
Hmm.
And then the whole quantitative easing that seemed to just cure everything and fix financial markets very quickly, right? And just thinking deeply about that, like what is really happening here? What is the Fed doing? And is this really fixing the root of the problem? You know? And obviously that was 15 years ago.
Hmm.
A lot has happened since then. And there's been many years where nobody was worried about the debt or the deficit or the dollar. But these things start slowly, gradually, and then it
Ramp
happens
up.
all at once. Yeah, it
Yeah.
happens all at once. And I feel like that's where, I mean, with where interest rates are, with where the Fed funds rate is now, with the position the Fed is in, with this deficit, with the national debt and the unfunded liabilities, you put it all up. This is a toxic brew
Hmm.
that could go bad very quickly.
Yeah. And I think with regards to the timeline, I think the thing I've learned, and I was probably far more naive about when I was younger, is thinking that, oh, this is all going to happen by Christmas. And just because you hear these headlines and you hear these things, you don't really understand, like you said, short term 5, maybe 10, maybe 15 years. But then at some point, the ramp really occurs. But it takes a long time for some of these big global transitions. Having traveled the world a little bit more, I've have become slightly more bullish on the US in its resolve, I think, to problem solve. And it's there's no shadow of a doubt its back is up against a corner. Um, but there's a lot of mental capital that's remaining in that country to problem solve. So you are in an interesting corner being down in Miami. Ken Griffin, CEO of Citadel, came out and said he sees Miami as the potential financial future of the United States. What's the sentiment, just like maybe not even commodity related, amongst people in South Florida on the future of the US and optimism, or like how are people feeling?
I honestly think Florida is kind of a sanctuary in a
Mm,
lot of ways. And it's a very unique place because it's a melting pot. It's probably the most diverse state in terms of culture and the number of passport holders here, the number of languages spoken. It's got to be up there with California and New York. Um, Everybody wants to be in Florida. I mean, every time I fly home to Miami, the flight is full. I am never on a flight to Miami with an empty seat. And I can't say the same for other places. Um, there's a lot of money here. There's a lot of money in Palm Beach County, Broward County, Dade County, the South Florida area, the Tri-County area. Is incredible amount of wealth, incredible amount of talent has moved down here. And I think people are optimistic in Florida. I think um, a lot of people in Florida are proud of how the state dealt with the pandemic and
hmm
how we kept our freedoms as best we could.
hmm
And we allowed people to make their own personal choices as to what they thought was best for them, both in terms of vaccination, masking, social distancing, et cetera, right? And I think there's a lot of pride in that, especially in terms of what other jurisdictions did and the rights they took away from their people, you know, and it was ultimately for silly reasons.
Hmm.
Um, so yeah, I think Florida is very bullish, a real haven in a lot of ways. But at the same time, everybody wants to live here. So prices are up 50% in the last 3 years. Rents
Right.
are up 50%, right? So, I feel for people that don't make six figures and live in South Florida because it is tough. It is tough
Yeah.
to get by on even 75,000 a year. You're basically hand to mouth now with the price levels that we see out there. And there's so many super wealthy people that have come down from New York City, from California, and they just drove up the housing prices. They're driving up food prices. It's classic, sort of inflation. Um, like a big episode of inflation since 2021. And I know that Florida's not the only place that's seen that. But as far as the ability to get a job, if you're hungry, if you have skills, if you have talent, you can do very well in Florida.
Yeah. And in terms of inflation and driving up the prices, I mean, that's the narrative and the story here in Vancouver as well. I mean, and like you said, the 75,000, if you're making that in Vancouver, these days you're just kind of getting by unless you're living in a suburb and not doing a whole lot. So it's tricky in these very desirable cities. But to jump back into, I guess, the metals and the mining commodities, you've said that the junior companies that you really like to look at are the ones that are under the radar. So I guess what kind of classifies or qualifies a company in your eyes as being under the radar?
Well, the first thing you want to look at is the market cap.
Yeah.
So for me to be under the radar, you're under 20 million market cap in
Hmm.
Canada on the venture. So, in the US dollars, about 15 million market cap or less is where I qualify as under the radar. And then just how many people are talking about the company? Like,
Mm.
can I pull up co.ca? Are there 40 people on the channel every day constantly posting? How many, newsletter writers are covering the company, right? So sort of like how much is priced in, right? Because you got to think of the market as a game of high expectations versus low expectations. So when the expectations are higher for a company, the price you pay for the shares is also going to be higher.
Hmm.
And then the results the company has to generate, the bar is that much higher
Yeah.
to move the share price, higher again, right? Whereas when the expectations are pretty subdued and not many people are interested in it, well, the price you're going to pay for the shares is going to be a lot less. And that's going to
Hmm.
give you a lot more potential
For the upside.
payoff. Yeah.
Right. So when there's too many voices, too many people speaking about the stock, that's sort of a turnoff. And that was something when I used to work in the conferences, it was sort of this intangible way of appraising a company was kind of seeing what the herd was doing, seeing how the pack was reacting to things. And if you maybe had one intelligent voice who was there before the hundred other, followers could come on, that was a sweet spot that I always really used to try to find. Um, so one of the things you've mentioned actually in past interviews as well, and this is across the landscape, it's tough for greenfield exploration to get funding. So how do you factor that in when you're looking at these under the radar companies? One of the challenges that they're going to have is that their assets are probably, maybe they've got great assets, but maybe these are a little bit more early stage. I guess like how do you kind of sift through, all of the companies to kind of find things that are under the radar while the project isn't too early stage.
The greenfield stuff is tough. It's just tough. And
Mhm.
and generally, um, if it's a greenfield project, I want to see some results. So they have to have drilled at least one drill program, right? I'm very rarely just going to be like, oh look, they've done some soil sampling, they picked some rocks up off the ground. okay, I'm going to buy that stock. You know,
Hmm.
no, it's got to be like there's got to be at least one drill program into the project. There's got to be some data to chew on, right? But some of the sweetest setups, like there's two stocks that really pop into my head right now. One is AUOZ on the CSE, and the other one is EDG on the venture. Those are the symbols. They're both in Canada. They're both
Hmm.
gold companies. And I like both of these because I think they're both a bit under the radar right now. I think with AUOZ, the market cap is about 15 million or so in Canada. With EDG, it's a little bit above 20 million, but high grade. So we're talking about lots of drill intercepts,
Hmm.
averaging over 5 grams per ton gold.
Hmm.
Pretty, you know, well, defined ore bodies on both companies' flagship projects,
Yeah.
and they're both starting drill programs right now, 2024. So, here's like a classic setup for me. The market cap is 20 million or less. Not many people are paying attention to the company, and the drill program has just started.
Hmm.
The drill program is fully funded, right? Like they've raised capital in the recent past, which is the
Hmm.
case for both companies, AUOZ and EDG. So they're fully funded. They don't need to raise again this year unless they absolutely want to, right? They're just given such a sweetheart offer that they, choose to take it, right?
Hmm.
And the drill targets of this drill program that's just starting are pretty high probability, right? So
Yeah.
they're not 200-meter step outs into just wildcat territory. They're drilling around the edges of some areas that are pretty well known, and they're expanding the ore body. So
Hmm.
maybe 25-meter, 30-meter, 50-meter step outs, or maybe testing an area down plunge a little bit deeper to
Yeah.
add ounces, right? Like, so fully funded, under the radar, relatively low market cap, not a lot of coverage, um, not a lot of people in the co.ca channels, right? Tier one
Yeah.
jurisdiction. So we're talking about really pro mining areas of Canada in the case of both companies, high
W-
grade gold, and the company management and the insiders own a big chunk of stock.
Right. Yeah. I don't know a ton about EDG. I do know AUOZ Emperor. And you said, yeah, tier one, they're in the Abitibi Greenstone Belt. Um, I like that stock because of what the CEO is doing with adopting new technologies. They seem like they're a forward-thinking company in terms of there's a lot of historical results on that property. It's a really well-drilled property, but it just kind of sat dormant for a long time. Um, and so I've sort of John Florek, the CEO over there, I've spoken with him and I described what they're doing with AI as like the scene out of Moneyball, where, at the end, he's talking to the Yankees and he says, anybody who's not tearing down their system and rebuilding using, your method is sort of living in the dark ages. And I see like anybody who's not using AI to assist with their drill campaigns and their modeling now is really behind the eight ball. In that thread, what do you see a future for exploration? What do you see changes happening over the next 10 years in this space?
Yeah, for AI, I think that's gonna make a big difference. Like, in the case of the the drill program, for AUOZ, is the AI is really helping them with the
Hmm.
targeting because they have a lot of data to plug into the AI.
Hmm.
And when you have 100, historical holes, when you have the amount of data that they have, they're able to use the power of the AI to really generate some high probability, targets that they will test and would probably bear fruit, right? And when you're talking about a resource that's already about 1 million ounces, And can you get it to 2 to 3 million ounces? Because
Yeah.
1 million ounces is interesting, but it's not going to bring a major in, right? But if
Yeah.
you can get that to 2 to 3 million, especially 3 million at these kinds of grades, 5 grams, 5.42 grams per ton average, then all of a sudden you have a world-class project in a great jurisdiction, a great location with, lots of infrastructure. So, you know, 15 million market cap, way under the radar, and that's the pie in the sky.
Yeah.
It's not a 100 to 1 long shot. We might be looking at something that might only be 5 to 1 to actually
Hmm.
have that happen, where we get multi-million ounces. I'll take that shot every day, right? I'll
Yeah.
take that shot every day. And these are the kinds of setups. So not just, regarding those two companies, but just the classic setup of, can you find something that's under the radar, where the company has a really good plan, a really good corporate strategy, and they were able to enroll big investors uh, on their strategy to write checks to invest in the company. Well, that's a huge checkbox for me. And then, okay, well, if that guy wrote $1 million check, well, certainly I can buy $10,000 of stock in that company and take a shot at at a 10 bagger, right? And so the more DD you can do, the more companies that you can take a look at.
Hmm.
Well, maybe for every 10 or 15 that you check out, maybe one will sort of meet that criteria, being way under the radar, being at a pretty low valuation, with a really interesting project, and a sort of high torque strategy that could bear fruit very quickly.
Hmm. Yeah, and you're definitely checking off on those boxes. Is it funded? How's the management looking and doing? Does it have some eyeballs on it, but not too many? And then when we spoke last time, you also said some of the things maybe the intermediate investors are kind of missing when they're getting through those early stage vettings of these companies into starting to do some more of that due diligence, is starting to understand. You spoke about context a little bit. So I guess how does that kind of play into the decision making when it's filtering through these companies as well?
Well, so, what does context mean in junior mining? So context is, who are the management team? Like, who are
Hmm.
the individuals involved? What's the share structure?
Yeah.
How many shares are out? How many warrants are out? What's the exercise price of the warrants? How many options are outstanding? When did management grant the options? What's the strike price on the options? How much cash does the company have in treasury? Where are the projects located? What are the terms on the projects? Are they 100% owned, or are they owned by an option agreement? What are the terms of the option agreement? How much more capital will the company need to earn 100% of the project? What's the timeline to earn 100% of the project, right? So these are all key
Factors.
contextual details that investors should be familiar with before investing in any junior mining company. But
Hmm.
really, perhaps the most important one really is just getting to know the management team. Because at the end of the day, the CEO and the board are the ones who are going to be spending shareholder money.
Yeah.
And they're going to be the one calling the shots, like where to drill. Like, where to drill is a really important choice to make, because it costs money to drill, it takes time to drill, and you kind of only get one shot at it, right? Like, company goes out, raises a few $1 million, then they drill 8,000 meters or 10,000 meters. Well, if they screw up the drill program, well, that's going to be really bad for the share price and for shareholders. So you want to have confidence that they know what they're doing,
Yes.
and they're going to be doing it on budget, based upon the budget that they outlined when they raised the money. And then just have some idea. You don't need an exact date on the calendar, but just some idea roughly of when the results are going to be coming back. And then you want to pay attention to the results. You want to study the results. So yeah, there's a lot of different contextual details in junior mining that are really important. But if there was one, if I could just dumb it down to one little soundbite, it would be who is the management team and who are the largest shareholders, and
Yeah.
are these people that you're comfortable being alongside of?
Hmm. Absolutely. Yeah. And I think that's like on the very beginning end of the spectrum and on the most experienced end of the investing spectrum, it comes back to that trust in the management. And you go through an arc of learning about everything and then back to, I believe these guys are, this team knows what they're doing. Um, well, that's a lot of information. We covered a lot of ground, and I feel like we could have even gone in 10 different directions as well for an hour each. We'll save it for another interview because you've got a lot more knowledge and a lot more stories that I'd love to pull out. But thank you for sharing the history of how you got into this, your experience, the companies you're following, your outlook. A wealth of knowledge. People should definitely be following you because you are, well, in my opinion, one of the rising stars in this space. So, congratulations to all the success and the continued effort you've been putting in over the years.
Thanks, Jeremy. I really enjoyed it. Great questions, and I look forward to doing it again in the future.
Yeah, likewise. Okay, Robert, take care.